Well, interestingly, in Europe, markets have just ticked up, but we are being completely left out of that. And remember, there have been losses on the JSE since Monday, so down almost 8%. Markets, especially emerging markets like our own, being very hard hit by fears of a full-blown trade war between China and the US. Also, a currency war. Those fears have resurfaced, and that weighing on the rand as well. We'll get some analysis. First, let's take a look at your main financial indicators. Right, we're joined by Makwe Masilela from Makwe Fund Managers. Thank you for being with us, as always. So before we get to the trade wars and Harley-Davidson and everything like that, just let's look at some of the stocks really weighing the JSE, because we're down much more significantly than anything in Europe. So Naspers, 1.2%. What's going on there?
I mean, Naspers, we saw what they've announced yesterday with Swiggy, that they managed to increase or raise funds again for the third time now, almost 210 million. And it's a nice thing going forward. And I think, you know, it's not supposed to be like that. I think Naspers is down because of what's happening with Tencent, because they own almost 28 or 29% thereof. But going forward, I think Naspers are trying to not rely more on on Tencent as they used to, for them to start acquiring these online food services. You know, it shows that they're trying to get something. And just if you look at their earnings for the full year, I mean, increasing those earnings by almost 72%, thanks to classified advertising as well and e-commerce. So that helped to some extent.
Yeah, so they're trying to diversify, because the claim has been Naspers is entirely affected by what goes on in Tencent, their big tech investment in China, and the JSE is entirely affected by what Naspers does. Is the fall a tech story, concerns about tech stocks, or concerns about China because of this imminent trade war?
Both, given that China itself, as you see, the markets that are almost down, they're almost at what you call the bear territory, down almost 20%, you know, in the last the highest that they've seen in the past 5 months. So that also affects that, and also the tech story that we've seen starting to formulate as from Monday. And like you said, you know, for them to raise almost 9.8 billion, Naspers by selling 2% of Tencent, that managed to give them some cash cushion to be able to move and try to buy other things as well. And also raising that 1.6 billion from the Indian company that they sold to Massmed, that was also good for them. So as we're talking now, Naspers itself, they've got enough cash to be able to do whatever they need to do going forward.
Okay, so talking about billions, somebody needed to raise some and sold Shoprite shares. It's not a big surprise. Christa Visa selling quite a 2.9%, I think.
If I'm not mistaken, he's doing that for the second or third time this year, you know. I think he raised at some point almost 4.2 billion. So this time it's almost 3.8, you know. So basically he sold just 2.9% of Shoprite, but he's still the largest shareholder, because before that he was owning almost 14%. Just like Steinhoff, because of Steinhoff issues, he was still the largest shareholder. So I think at some point the guy has to find a way to be able to raise the necessary cash to settle whatever that he needs to settle.
For Shoprite, does this mean anything more than a temporary, although significant, 6% dip in the share price?
It's not serious, in the sense that they've done the block trade, you know, so that obviously sold to institutional investors at a discount. So the market is trying to retrace those prices, but that is not talking to the fundamentals of the stock itself.
All right, now the bigger picture is we're being weighed. At what point does it become a trade war between China and the US? First?
I think maybe on the 6th of July, because that's when we expect all these things to trigger in, you know, because so far everybody's been saying as from the 6th of July, 6th of July. So maybe as from the 6th of July, maybe we can start calling it a war, and we hope maybe we don't get there.
Well, he says so. U.S. President Donald Trump says $34 billion worth of Chinese goods will be taxed in the form of tariffs on imports. China saying they're doing the same, but you're saying at one point China won't be able to push as hard as the US.
You know, so far it's been tit for tat, you know, but for the fact that China is selling more to the US, you know, then if they have to continue tit for tat, China will run out of things. Because if you check the trade between the two, they've got a deficit of almost just over 300 billion, you know, which is favoring China. So pound for pound or dollar for dollar, China will run out of things and they have to start looking at other things. And it's not surprising. We have seen China, they've announced that as from the 5th of July, just a day before the tariffs kicks in, they've just reduced what they call the requirements, you know, the capital requirements that the banks have to hold, meaning banks will have more money, you know, they don't have to keep a lot of money as reserves. The reason being they should have more money to be able to lend out to, especially to small businesses. So in a way, they're preparing themselves because we don't know the actual results of this whole thing if it continues. So
and they could start selling US Treasury bonds. They've warned that. Nobody knows where it's going. Why are emerging markets like our own being specifically hit?
You know, in cases like this, you know, you get what we call a risk aversion. So unfortunately, the likes of us, Turkey, stuff like that, we are classified as emerging markets. We are very risky. So you see people moving into the likes of your yen, the Swiss, the currency, the likes of your gold as well, and treasuries. And worst of all, even gold itself now is starting to lose out, you know, when you compare to other safe haven assets like the US treasuries, like your Japanese yen. So anytime you get tension, whether it's geopolitical tension or the current trade tension, people will run away from risk and they have to bet on what we call safe havens. Hence, we get affected.
And sometimes they'll sell rands and go back into the dollar, even if the US is an instigator of the problems.
Unfortunately, they don't look who's the instigator, but which one is the safest bet to stick to. And the rand itself, as I was saying, is very volatile because most people, they see that, you know, as a bellwether when it comes to emerging market. They use it as a barometer because the rand itself is very liquid, so it gets to be traded.
Finally, where do you see this going? And do you think that the US has a point, you know, tit for tat, let's make trade fair? But ultimately, in the end, Harley Davidsons may be taxed, everything coming into the US. Couldn't US citizens themselves really suffer from higher prices?
They will ultimately, but it's not only just US citizens, even other countries. But truth be told, you need a fair trade. If you guys are really imposing some tariffs on my goods, it's not fair because you're making my goods very uncompetitive when they land at that other side. So all you need is fair trade for everyone.
So do you think he's being a bit blunt tool here, or he's being fair enough?
And he mentioned that, you know, even or during his campaign, that I'm pushing for America first.
All right, thank you very much, Makwe Masilela from Makwe Fund Managers, and that's a wrap here from us at the JSE.